Good day, everyone. So, today I'm going to discuss the topic e-commerce business plan. So, for years, you've purchased items from online businesses or marketplaces like eBay, Amazon, Lazada, Shopee, etc. And you thought to yourself that you could do something like this too. So, starting your own e-commerce business may seem intimidating, but writing a business plan even more so. However, a business plan allows you to validate your business idea, assess your financial position, and create a concrete action plan for how you will deliver a product from the original source to the end consumer. In other words, while the business plan might seem like it's ultimately meant for other people's benefit, potential investors, business partners, or well meaning family members who keep pestering you to write one. In reality, the business plan benefits you, but the business owner the most. You will shape the vision and mission for your business and map out how you will get there. One study by Harvard Business Review found out that entrepreneurs who write a formal business plan are 16% more likely to achieve viability than those who don't. So, an e commerce business plan is a document that outlines your business purpose and goals. It analyzes your industry and competitors, and it identifies the resources needed to execute your plan. For example, which supplier will you work with? What types of products? Who will be your ideal buyer? How will you advertise your business? Can you afford to provide free shipping and still make a profit? So this topic will give you knowledge about business plan, the SWOT and TOS analysis, and the marketing mix. So I am Antisa Formanes and I will be the reporter today. So let's start with suitability of a business to go online. So suitability is the fact of being acceptable or right for something or someone. In business, suitability refers to an ethical, enforceable standard regarding investments that financial professionals are held to when dealing with clients. So a firm must ensure that an investment is suitable for an investor as outlined by Financial Industry Regulatory Authority, or what we call the FINRA. So this suitability ensures that an investor's situation matches the particular investment recommended by an investment firm. So in general, suitability can be determined from an investor's profile, which contains information such as the investor's risk tolerance, the investment time frame, and its goals. So what are the considerations to go online? First, assess the viability of your new business idea. So just because it's easier to start an online business doesn't mean no costs are involved. So as with a physically based business, the first step to take with your online business is to assess your idea's feasibility. So that's why in business, we are conducting usually feasibility studies. And the most brilliant business idea can be unsuccessful if your product or service has no market. So with this in mind, you have to evaluate your idea. So you have to ask yourself, now does your product or service solve a problem that enough potential customers have? Or does your product or service product a cost-effective solution to that problem? And so on. Second, you have to develop a business plan. So once you know your idea is feasible, so after the feasibility study, and it turns out to be feasible, so it is time to put together a comprehensive business plan. So even if you don't plan or on obtaining funding for your business, so at least not initially, But having a business plan is valuable because it lets you spot any potential bumps down the road and plan for future growth and profitability. So an effective plan will help you to identify your market further, clarify your objectives, provide a marketing roadmap, and assist you in making the kinds of decisions that may mean the difference between success and failure. Third is you have to choose a business name. So choosing a business name is an important step in the startup process because your business will primarily function online. Your chosen name must be available for registration as a business name in your state and within the digital space. So this means you will need to check whether the name you want is available as a business name in your state, the domain name, the username on each of the social media platforms you plan to use. Fourth, you have to decide on your business structure. So the business structure you choose will dictate the legal and tax requirements you need to meet. So you have to identify what is your business structure. Is it a sole proprietorship, partnership, or corporation? Because it is always a good idea to consult with an attorney to determine the appropriate business structure for your new business. Because each structure has different tax requirements. You may also want to consult a tax professional. Number 5 is you have to take care of all the legal tasks. So you will need to file all the appropriate business information documents and other paperwork to ensure your new business has a solid legal foundation. Since the requirements vary on a state-by-state basis and the nature of your business, it is very important to do your research so you meet any applicable requirements. It's often helpful to consult with an attorney with experience in business startups in your particular industry to make certain you are on the right track. Number 6, you have to build your website and choose your sourcing and fulfillment methods. An online business website is as important as the physical location of a brick and mortar company. When looking at how you will build your website, consider available payment processors. So for many online businesses, they are usually hiring a website developer to help build their sites and make sound businesses sense. Next is you have to develop and implement your pre-launch marketing strategies. So it is very important to market your online business while you are working on each of the previous steps. Your business plan will have provided you with the information you need to develop effective marketing strategies for your potential market. No matter what strategies you go with, it's important not to skimp on implementation. So by building up your target market's anticipation of your launch through social media and various advertising methods, you will be paving the way for a successful launch. Number 8, and the last, is you have to launch your business. So while you won't actually be cutting the ribbon the way you might with a physical business, you will be doing so metaphorically when you make your website live and announce to the world that you are open for business. So this announcement can be made in a variety of ways, including social media platforms, your email list, online ads, or traditional ads. And under my topic, I will also be discussing the best or the suitable online business for online. First, the e-commerce, selling goods online. So at its simplest form, e-commerce is an online shop, so selling tangible physical products that are delivered to the customer. So this includes businesses which are manufacturing their own brands. Second is the social media influencer, and we are all familiar with this. You can also be a writer and blogger, videographer, or photographer. The drop shipping e-commerce, it's like buy and sell. Next is the podcasting. So you are going to advertise your product through, it's like a radio. Next, selling services online. It is also very common. And then affiliate marketing. Like for example, in TikTok, there's a lot of affiliate marketing. Then the retail arbitrage e-commerce. It's also like buy and sell. And then the freelance designer. So there are also standard the e-commerce laws. No, these are the guide before putting up a business. So like for example, you have to consider the taxes, the payment gateways, trademarks, patents and copyrights, shipping restrictions, inventory, age restrictions, business insurance, licenses and permits, PCI compliance, and of course the customer privacy. Next is the SWOT analysis. So SWOT analysis is a strategic planning and a strategic management technique used to help a person or organization identify strengths, weaknesses, opportunities, and threats related to business competition or project planning. So it is sometimes called situational assessment or situational analysis. So this technique is designed for use in the preliminary stages of decision-making processes and can be used as a tool for evaluation of the strategic position of organizations of many kinds, example for-profit enterprises, local and national governments, NGOs, etc. So it is intended to identify the internal and external factors that are favorable and unfavorable to achieving the objectives of the venture or project. So users of a SWOT analysis often ask and answer questions to generate meaningful information for each category to make the tool useful and identify their competitive advantage. So SWOT has been described as a tried and true tool of strategic analysis, but has also been criticized for its limitations and alternatives have been developed. And as we all know, SWOT analysis have four components. So the name is an acronym for the four components: the strengths, weaknesses, opportunities, and threats. The strengths are characteristics of the business or project that give it an advantage over others, while weaknesses are the characteristics that place the business or project at a disadvantage relative to others. Opportunities are defined as an element in the environment that the business or project could exploit to its advantage. And threats are the elements in the environment that could cause trouble for the business or project. So before I go to those analysis, this SWOT analysis is composed of internal and external factors. So strengths and weaknesses are usually considered internal, while opportunities and threats are usually considered external. The degree to which the internal strengths of the firm matches with the external opportunities is expressed by the concept of strategic fit. And there is also what we call the TOWS analysis, the TOWS analysis. So TOWS analysis is very similar to SWOT. However, there is a key difference between the two. So other than a reshuffling of a few letters, While SWOT analysis puts the emphasis on the internal environment, that TOES forces you to look at your external environment first. So TOES analysis is an extension of the classic analytics tools, the SWOT analysis. So here, as you can see in the figure, it is the figure for SWOT analysis and at the same time, the TOWS analysis. So in internal factors, these are viewed as strengths or weaknesses depending upon their effect on the organization's objectives. So what represent strengths with respect to one objective may be weaknesses. For example of weaknesses, distractions and competition. So for another objective. And the factors may include finance, manufacturing capabilities, and all of the marketing mix. While the external factors include macroeconomics, technological change, legislation, and socio-cultural changes, as well as changes in the marketplace. Next topic is the marketing mix. A marketing mix includes multiple areas of focus as part of a comprehensive marketing plan. And the term often refers to a common classification that begins as the 4 Ps. Okay, what are those 4 Ps? The product, the price, the placement, and the promotion. So product represents an item or service designed to satisfy customer needs and wants. To effectively market a product or service, it is important to identify what differentiates it from competing products or services. It's also important to determine if other products or services can be marketed in conjunction with it. Price is the sale price of the product reflects what consumers are willing to pay for it. Marketing professionals need to consider costs related to research and development, manufacturing, marketing, and distribution, otherwise known as cost-based pricing. So pricing based primarily on consumers' perceived quality or value is known as value-based pricing. Placement is the type of product sold, and it is important to consider when determining areas of distribution. So basic consumer products such as paper goods often are readily available in many stores. So premium consumer products, however, typically are available only in selected stores. So another consideration is whether to place a product in a physical store, online, or both. Finally is the promotion. So joint marketing campaigns also are called a promotional mix. Activities might include advertising, sales promotion, personal selling, and public relations. So a key consideration should be for the budget assigned to the marketing mix. Marketing professionals carefully construct a message that often incorporates details from the other 3 Ps. So when trying to reach their target audience, determination of the best mediums to communicate the message and decisions about the frequency of the communication are also important. Okay, so in marketing mix, not all marketing is a product focused. Customer service businesses are fundamentally different than those based primarily on physical products. So they are often will take a consumer-centric approach that incorporates additional elements to address their unique needs. And just for an additional, the 3 additional pieces mentioned a while ago are people, process, and physical. And finally, the business plan. So a business plan is a document that outlines the goals of a business and how the business will achieve those goals. So while there is no standard format for a business plan, such documents typically cover what the company will do, what problem it will solve, how the business is structured, who the target market is, and how the product or services stands out from the competition. A business plan serves as a roadmap for your company and helps you stay focused. So having one is also useful for attracting investors and business partners, as it shows you are serious about your business, you have done your research, and you know your industry and have considered the challenges you may face along the way. Okay, so how to make an e-commerce business plan? So to make an e-commerce business plan, it must consist the following: the summary, the company introduction, market research, the company structure, products and services, the marketing strategy, and the finances. So in summary, this section concisely introduces everything that you will be covering in your business plan. So for example, the company name, who are the founders or who is the owner, what is the product or what is your service being offered, um, what is the target market, what are the marketing strategies and goals. In company introduction, it explains what your company does and what makes it stand out. This also consists of the mission statement, the company values, and its vision. In market research, you have to get to know your customers and competition. So who will be your ideal customer, what is your market size, and what is your competitive analysis. And also, it must be here, know what makes your business different from the competition. So you are going to include the advantages and opportunities or the SWOT analysis. In company structure, so in this section of your e-commerce business plan, you should explain the legal structure of your business, the leadership team, and the organizational chart. In product and services, you have to explain what makes your e-commerce shop on shine. Its products and services. So you are going to introduce and tell something about your product and services. And in marketing strategy, this includes the SWOT analysis. So you are going to apply the SWOT analysis, the marketing channels, the marketing strategies, and the marketing goals. And finally, the finances. So did you know that in a business plan, finances is the juiciest section of your business plan because it helps you set sales and fundraising goals that will let you explain to investors where you stand financially and why you need their investment. So here it must consist of the revenue projections, profit or loss, expenses, debt, investment, and budget versus actuals. So in conclusion, a business plan is a document that details a business's future objectives and strategies to achieve them. It is designed to describe a company's core business activities and the specific processes that will help them achieve established goals. It can be an internal roadmap, a management tool, as well as a guide for employees and investors to understand the ins and outs of a given business. Okay. So, when you record what you want to achieve and how you're going to achieve it, you are more likely to turn your vision into reality. So, thank you so much for listening.